Good morning, everyone, and welcome to the third webinar of the Seamless Middle East webinar series. So today we have a 60-minute panel discussion entitled Fast Tracking Fintech Innovation During a Global Lockdown. We're lucky to be joined by 5 industry experts on the panel who've kindly agreed to share their insights as we discuss fast tracking fintech innovation. So joining us as panelists, we have Catherine Budd, who is the co-founder and CEO of Now Money, Hassan Haider, who is the MENA Managing Partner for 500 Startups. We have Wylam Kwok, who is the Senior Executive Director of Capital Markets for Financial Services Regulatory Authority at ADGM. Craig Moore, who is the CEO and founder of Beehive. And in a slight change to the programme, moderating this session, we have Abdullah Wali, who is a digital consultant at Deloitte. So in a moment, I'd like to hand over to Abdullah so that we can get started. Before I do that, can I ask all of our panelists to turn on their webcams and microphones? And whilst everyone is doing that, please can I remind all webinar attendees that you can ask questions throughout the session, and our panelists will do their best to answer them. So without further ado, Abdullah, I'd like to hand over to you.
All right, good morning, everyone, and welcome today. We have a great number of panelists with us, which will hopefully instigate an exciting conversation that will really bring us into light about fintechs. So I'd like to just start off with potentially if the panelists can please just introduce themselves, give us a little brief background about what you do, some of your expertise. And I'd like to start off with Catherine. Could you just give us a quick info?
Sure. So I'm Catherine. I'm the co-founder of Now Money. And Now Money is a digital banking product for people who don't earn enough to have an account at a traditional bank. You need to earn more than about 5,000 dirhams a month to have an account at a traditional bank in most of the Gulf. So we provide bank accounts to people who fall under that threshold, which is about 75% of the Gulf population. We work with employers in the region to give them a payroll solution, give all of their staff an account and a bank card that they can use to pay for stuff and send money overseas. So that we've seen great performance in having a digital product in the current climate.
Brilliant. Thanks you, Catherine. Wylam?
Hi, everyone. My name is Wylam. I'm from the Financial Services Regulatory Authority at ADGM. We are an integrated supervisor supervising the banking, insurance, and capital market sector. I head up the capital market supervision team, as well as head up the fintech agenda in ADGM. Thank you.
Thank you, Wylam. Hassan, could you please introduce yourself?
Sure. I'm a managing partner at 500 Startups. We're the most active investors in the Middle East. We've done about 200 investments almost in the last 3 years. And we've done quite a lot of investments in fintech as well.
Brilliant. Thank you, Hassan. And finally, not least, Craig.
Hi, yes, Craig Moore. I'm the founder and CEO of Beehive. Beehive is a SME-focused lender, so we're a digital lending platform focused on helping SMEs, not startups, but actually it's a lending product. Therefore, it's important that we're lending to businesses that are already established rather than early stage startups. And what we allow them to do is come to the platform, borrow on the platform in a digital manner, but most importantly, on the other side of that equation are investors who are able to lend in small increments from 100 dirhams to the SME businesses. So we're trying to create a community around the SME and the investor side within the UAE.
Brilliant. Thank you. Thank you everyone for introduction. So without further ado, I think we can definitely start this panel. So one of the topics that actually was brought up was the concept of, does fintech hold that potential to fill the innovation gaps and reach the unbanked? As we see the industry is really shifting towards a digital focus, especially happening around us. So actually, in fact, from Deloitte's perspective, for example, we conducted a Middle East fintech study, and we were looking in terms of the willingness and the adoption of fintech in the region. And one of the things we've really witnessed is, especially in the countries such as Lebanon, Egypt, etc., there is a high willingness, and which could be attributed to as well the number of unbanked. So I kind of want to get, for example, your perspective, Catherine, as you are an expert in this field of, do you think fintech holds that potential to fill the innovation gap? Does it address really what is required?
So I think in terms of the current environment, most remote access services. So, you know, platforms like Zoom have obviously seen massive increases, and we're no different. You know, we're a remote access financial services platform. So it doesn't take a rocket scientist to realize that people would rather send money and transactions from an app than stand in a queue in an unhygienic brick and mortar exchange house. So definitely, like, fintech in terms of digital adoption and digital products has the solution, not only just for people who are unbanked, but for people who previously didn't have access to the financial system, or particularly the digital economy. It's been an absolute lifesaver. So for us, you know, the last 3 months, every month we've seen a 40% increase in remittance through Now Money. And that's because people who perhaps were not part of the early adopters or even the middle group are now all having this kind of artificial shove towards digital platforms that maybe they wouldn't have looked at before. So now I think it's pretty obvious that fintech is certainly a solution and certainly answering a lot of the requirements, particularly for people who weren't included before. What we've got to do is sustain that level of engagement as we come out of this sort of strange time, because it's pretty clear that we're not going back to the same world that we left.
Of course, thank you, Catherine. And I would like to see Hassan, Wailum, Craig, do you have any other inputs you may have on this?
Yeah, certainly. I'd like to just share from my regulatory perspective. I think there is still a lot of room for us to unlock the financial inclusion story with Unbanked. Even today, as we see the digital acceleration happening, my guess is that it's somewhat in the banking space. Those that are banked, there are not enough players like Now Money out there to help accelerate the process. The positive thing is that as a regulator, we are seeing pockets of interest coming from certain fintechs exploring that space. So I think that it's, to me, it has always been a bugbear in terms of financial inclusion for the unbanked. It's not happening fast enough for me, and I'm hoping that what we are seeing in this climate would certainly, hopefully, accelerate that.
Brilliant. Craig, Hassan, any opinions?
What I'd add to what guys have said is that I think what you'll also see is just a general push, not just in financial services, but what's happening in all the other industries, which is a push towards digitization. And so, and digitization isn't just the front app. I think that's one of the misnomers that people see, is that a lot of organizations can have a front facing application, but I'm talking about established companies now. It's the digitization of that middle office and back office that is going to become incredibly important going forward, and particularly when we come out of this new normal situation, that businesses will look at how do they drive down the cost of doing business across the whole life cycle. And I think in financial services, what this will do is just accelerate what everybody's talked about over the last few years, and hasn't necessarily happened in all markets. Whereas I think now the banks will start to look at this and say, well, listen, we need to follow what the retail guys did 15 years ago, 20 years ago, and all the other industries, because it's going to change how people, and particularly senior management in banks and financial institutions, look at how they interact with some of the fintech players or some of the new players. Where can they help us accelerate and drive efficiencies in our business?
Perfect. Thank you very much, Craig. Hassan, do you have views?
I think I agree with most of the discussions around financial inclusion, but one of the things that I think was important was cultural barriers. In the GCC, I mean, most of the people actually that were transacting online were still 98% or whatever were using cash on delivery, even if they had the option and they had the ability to pay using cards and bank accounts. So there was a social sort of barrier related to it, maybe cultural, I don't know what it was. I mean, for me, it was, I didn't trust that whatever I was ordering online in the region was actually going to show up at my door. And it's gotten better now, but it's still not at 100%. I just paid for something a few days ago and they called me today and said, oops, it's out of stock. So this is going to still take a bit of time. So this shock moved everyone online. And I think there's a balance to be had between how this cultural shift, because of what's happening with the with COVID and everything, it has impacted everything essentially. And payments online, transactions online in general, even banking online, everything has become more culturally sort of needed and required than it was before. And that's a different side to the coin than the actual financial inclusion side, which was in Lebanon and in Egypt, and they basically don't have bank accounts or credit cards. So now I think you've got a confluence of events that have actually ended up with people being okay and actually, preferring to pay online and having cashless sort of exchange. And I think you're seeing more people that are looking to get bank accounts. And I think that what Wylam was saying was we still need more people that want to offer those bank accounts to these people. I haven't seen as many startups as I would like that are solving this issue across the region.
Okay, perfect. Thank you, Hassan. And I'd actually like to build on that a bit. So like you said, there's not enough players potentially to really build on this fintech ecosystem in the region, the GCC, in the UAE, etc. But one thing I want to like to build on is, so we understand there's banking the unbanked, helping that fintech addressing that need, but also in terms of what we see around us now with COVID-19 and the crisis, and we start also looking at the SMEs side of things, where we see that SMEs are struggling to survive on a daily with the decreased cash flow, and we understand that they're struggling to get the approval rates they need for their funding due to financial records, data integrity, etc. Which then brings me in terms of how can fintech really address that solution in terms of potentially partnering with fintechs for, let's say, data and analytics capabilities or other potential solutions. And I'd like to push this question first to Craig to just see your views of fintech's potential in the SME space.
So I think the potential is huge. The challenge you have is you've got to take a lot of people with you on that journey. Right? So if we talk about fintech working with the bank, typically they will engage with somebody in the strategy team or somebody in a line of business that has a particular interest in the product or implementing the product. But that's just the start of the journey. You've got to get compliance on side. You've got to get legal on side. You've got to get the whole machinations of a large corporate. We can talk about that because we're in the throes of entering a partnership with a bank for our Saudi launch. And it takes a long, long time to get that. So we can talk about all the benefits we can bring, and they're already seeing a lot of the benefits in the way that we're challenging some of the processes and the workflows. Why do you do this? And why do 5 people sign this off, etc., etc. So you can suddenly start to see by bringing a different approach, the different approach to analytics, and not just analytics, but also workflow and process becomes incredibly important. But when we look at the SMEs, everybody, when they talk on panels, talks about the size of SMEs, the 90% of employees. That's massive, right? 90% of employees are employed by SMEs. But remember, all those employees are also consumers. So they're also the bank's customers, right? They're the people renting accommodation. They're the people with the mortgages. They're the people that have to go and spend money in the F&B facilities. So there's no such thing as a disconnect of SME from the corporate world. I think one of the things that we're going to have to see is a more holistic approach taken to SMEs, particularly if they're in supply chains for large government or large corporates, because if those SME supply chains disappear, then that's a problem for the corporates to come back out when things hopefully get better in the God willing, in the near future. So in terms of how does fintech help in the SME space, I think it can help hugely, but it isn't just about the surface. It's about, can the fintech convince compliance and legal, and can you use some of the processes that you use in the fintech that the bank won't let you use? Now, is it because the bank won't let you use because it's just always done it a certain way, and therefore that's a mind shift, or is it a regulatory burden? And that can come on to different things we can talk about from a regulatory point of view. But it's not just about data. It's not just about saying you should lend to these people and you should lend to these people, because that's just one part of the decision-making process. If the bank then doesn't have the appetite, or if it's trying to lend under some form of guarantee system, has that guarantee system taken into account the unintended consequences? How much balance sheet does the bank need to put at risk? There's a lot of other components, but what I certainly hope as we come out of this is that this actually pushes or accelerates the conversations between existing financial institutions and the fintechs. And we've now got a number of fintechs in this region that have been operating for 3, 4, 5 years. So there's a lot of experience there that can be brought into play. And hopefully now a lot of the financial institutions are waking up to the fact that, okay, partnership is going to be incredibly important. And the fintechs can bring that data, they can bring that analytic capability, but they can also bring some smarts in other areas. But it needs the whole of the financial institution to embrace that.
Brilliant. Thank you, Craig. Wailum, as well as in terms from a regulator's perspective and all that, do you have any opinions in terms of this?
Oh yeah, certainly have lots of views about the SME financing landscape here. I mean, you probably know that we have this discussion before that our SMEs account for 50% of the GDP, but the approval rate is somewhere between 45% as compared to close to 85% elsewhere in the world, right? And as Craig put it, it is a pretty fundamental issue, not just with one aspect. It really covers a lot of angles around the internal processes of the banks, the risk tolerance of the banks, the ability of us to manage downstream in terms of supply chain, the digitization process of the SMEs to help them better report their financial status, the push of the regulators and policies around the government. So I think we need a holistic approach, that's for sure. And so look, while COVID is happening and the process and bring the stakeholders together to think about the solution, the immediate challenges are very real in terms of at the same time banks are probably taking a wait and see approach, given that their exposure to bad debt might be looming with companies failing and so on and so on. So in the immediate term, the challenges are probably going to get worse before it improves. But as a regulator, there are certain things we're already taking steps to sort of bring the various ecosystem players together. You talk about fintechs that are able to provide credit analytics, better assessment tools. We are organizing our next innovation challenge around various components of the SME financing ecosystem. We've been talking to various banks, startups, and what we're going to design is a series of problem statements that relate to each particular components of SME system and marketplace. For example, onboarding digitally. For example, matching algorithm to match buyers and sellers. Automated process to help them generate assessment reports to make more robust and more efficient financing decisions. Credit guarantee schemes, so on and so forth. So those are things that we're trying to bring together in this innovation challenge. It will be interesting to see how the various solutions that come up will be able to contribute and combine together to contribute to a larger financing marketplace. So I think that's immediately what we are doing, and hopefully being able to bring the various stakeholders to overcome the issue of a fragmented approach that we have seen traditionally in the past.
Right. Thank you, Wailum. Hassan, Catherine, any inputs regarding fintech's benefits in terms of the SME and the value it brings to the economy at the end of the day?
Yeah, I think probably just to add a bit, we've done a couple of investments with startups that are actually going after the SME and B2B market. And one of the things that I want to point out is when you're trying to disrupt the banking industry, the banks are massive. It's not just one sort of service that they provide. There's hundreds of services, and then there's all of this back end stuff that they do as well. So one of the things that we've seen in the US as well is different fintech startups started to unbundle different sections of the bank. So one of them might have taken the back end and fixed compliance, for instance. Another one is doing something else related to the front end, but a very specific area of banks. So we've done an investment in a fintech company that's doing providing bank accounts for freelancers and people that typically don't have regular income. We have done an investment in a company that provides debt financing, and another one that does, and that is actually coming from the banks themselves, because it's not the banks, it's not worth it to do these small loans because it costs them more than they'll ever generate in revenues from that sort of client. And then there's others that we've got in our portfolio that are looking at different sort of small areas within that things. So when we're looking at fintech disruption for SMEs, I'm personally not looking for, hey, here's a challenger bank for SMEs. I'm looking at, okay, which different areas within SMEs, financing needs, banking needs, is this startup sort of solving? And then, yeah, great, they can use that as a sort of beachhead into providing further services at a later date. So I think that's probably where I'm looking at it. It's more what pain points is this startup specifically solving? And I think, you know, to go up as a challenger bank and try and sort of disrupt the entire financial industry within the Gulf markets, not only is it going to cost you a lot of money, but also a lot of headache and compliance and regulatory issues. That honestly, for a small startup at the seed stage where we invest, isn't worth it. And I honestly haven't really seen a lot of the existing banking institutions within the Gulf. A lot of them talk and they're like, hey, we're supporting SMEs, we're supporting startups, we're being innovative, and that's great. Like, their marketing and communications departments are working overtime, but when it comes to actually implementing something in the bank itself, it's a whole different story, because you're not talking to the Marcom people, you're not talking to those, you're talking to the people in compliance and back office and back end. So I don't see the banking institutions within the GCC in general. There probably are specific sort of outliers within that, but in general, I don't see them being able to really solve the problems within the SME market across the region. And I think I don't even see a big startup that's going to come in and solve the whole banking needs for the SMEs. I think really it's going to be small niches within fintech that I guess, like Wailam was talking about with their innovation sort of program, would sort of help build this stuff for SMEs in the region.
Brilliant. Thank you, Hassan. Catherine, any input from your end regarding this?
Yeah, I guess I just say there's sort of two levels of financing if you're talking about financing for SMEs, and one of them is, you know, the very traditional sort that we've talked about, which is, you know, lending to somebody who's got an operational business. It might be, you know, it's more of a traditional family-run business or something that a couple of people might run, versus traditional tech venture funding. Both of those, I think, probably quite impacted at the moment, but both probably required more than ever. I think it's not really to do with data and analytics, like lack of data and analytics, that means that there's not much financing available for SMEs. I think, you know, as we've covered many times, banks in this region are very reluctant to lend to SMEs for a number of reasons. You've really just got Craig and like very small the numbers of players that are willing to do something alternative for lending to SMEs. So there isn't tons of options around, and you know, that's a good thing for Craig, but it means that there isn't like loads of options for businesses who are not at an advanced stage that they can borrow from platforms like that either. So your newer tech businesses that, you know, whether they're in fintech or outside fintech, that need access to capital, right now quite a lot of the venture funds have still got dry powder because, you know, they haven't used that up. But I think, you know, 6 months, a year down the line, we're going to see quite a lot of venture funds that are impacted by the current situation as well, because their normal LP raising process that they'd be going through, you know, it's the start of the year, seems like a very normal time to be doing that, is going to be affected at the moment because everybody is locking down. So I think we are going to see a lot of impact from the current situation. I don't think it's just, you know, traditional SME financing from banks. I think it's going to affect financing for new tech businesses as well, probably at the last time that we actually want it.
Brilliant. Thanks. Thank you, Catherine, for the input. So, okay, so I want to actually build on. So one of the things we're hearing about quite come up now is the fact that there's not maybe enough players in the different domains. Like we said, it might be good for Craig or anyone else. So it's just the concept of why is there not enough players? Could it be the low financial literacy in the region? Or can we consider it to be because of the fintech regulation? So should it be considered that we could ease the fintech regulation, enable that market openness to support the accelerated growth of fintechs, bring in more providers of payments, SME lending, etc.? So I'd like to maybe start off with Wailum in terms of this. What's your perspective? Is it something that could be detrimental by easing the regulation, or will it really help, especially in this region?
If you ask me the question a few years ago, I'd probably say yes, there are a lot of regulations that help to support that. But today, I think we do have a few options for startups to consider various services. That said, I think the issue is not just about easing of regulations, because we try to put in place certain regulations to help. It could be a case of, let me reframe it as a case of our rules and regulations not adapting fast enough to new fintech business models, and that is going to be one key pillar of our work going forward. Let's just let me give an example. Right? I mean, if you have a fintech that is able to initiate payment transaction, but you are not able to demonstrate your capability, or not able to showcase what you have in terms of assuring your technical standards to the regulator. The regulator is going to struggle in terms of regulating you or making a decision around your business model. We recently announced our initiative to digitalize our regulations. And by digital regulations, what it means is that we actually allow the fintechs to interact with our rules through APIs digitally, such that they can actually speak to each other to build compliant solutions that the regulator would accept. So with these digitalized regulations, we hope that we are able to, through our digital sandbox that we have, connect between fintechs and us. We are actually enhancing our regular sandbox and building the next version of the sandbox, which is the digitalized version of the sandbox. Right? So in theory, the two can connect together, and it could be as simple as me issuing a set of rules and regulations in digital format in the digital sandbox, and the payments initiator will just have to plug into the digital sandbox, and the lab, we call it digital lab, right? The lab will actually certify that all your processes are compliant with regulations, and I can theoretically then issue you a license. You can conduct your activities. So I think having that ability to move fast in terms of to grant licenses quickly for firms to start up and conduct their business, I think that's going to be a game changer going forward. Now, this might sound very futuristic, right? But I assure you that it's happening sooner than you think. Hopefully next year when it's a seamless webinar about the progress around it.
Perfect. Thank you very much, Wailum. Craig, Catherine, Hassan, any opinions regarding the regulations, whether you've experienced it, and your opinion in terms of can easing it up really help accelerate growth and bring in more players?
I think Craig and I have got really similar opinion about this. Sorry to jump in, Craig. I mean, both of us decided to do something new a few years ago, and it has been an incredibly slow and painful process to get to the point where it's accepted by multiple regulators. You know, the Gulf is a very fragmented market. We've got multiple regulators here in multiple countries. It's not a common market. So you've got to be dealing with that on one hand, and then you're almost fighting the same battle again to get the banking partnerships that Craig mentioned. So you've got to convince a banking compliance department that what you're doing is okay with the regulator sanctioned it, and that you're going to be compliant with their processes as well. Now, that's obviously when you're trying to get going and get something launched, it's an incredibly frustrating part of the process. but it's one that you just have to swallow if you're going to work in fintech. Like, that is probably always going to be your biggest challenge, is like regulation, compliance, banking partnerships, really all the stuff that goes around the launch. Once you've got those in place, you know, your life, providing you continue to remain compliant, is going to become a lot easier. But it is a huge barrier to entry just because it is so slow and capital intensive as well, because you've got to get these large organizations to work with you. You know, we also have hardware, we have cards, so we work with organizations like MasterCard and Visa. So it's expensive and time consuming. If I worked in a compliance department at a bank, do I think they should make it easier for people to come in? Not really sure, to be honest, because there's a huge amount of being able to manage a payments business competently that only comes from having good payments experience. So you can be a top developer, top data scientist, but without having some payments experience, you will probably never be able to bring the logic to the table that's required to pick up on things like, you know, criminal activity, funding of terrorism, those kind of things. And none of us want to be the enablers of that. And if a bank is caught providing its services to a fintech that then enables that, that bank's going to lose its ability to settle in USD. It's going to potentially lose its license. It's going to go out of business for really what seems like quite a small return on investment for working with a fintech. So you really do have to consider it from both sides of the table. They're not just being lazy or you can't be bothered or this just, you know, isn't something that we're interested in. Most people that work in banks are actually really excited about fintech and the prospect of working with a fintech. But then once they put together a business case and there's a huge amount of risk tied to it, you can see that it does start to outweigh the benefits of working with them. So I think Craig and I'm very glad that we are at the position that we are now. But like, would we recommend this process to somebody starting out in a new fintech? Probably not.
So I agree with what Kat's saying, and I guess to add to what Hassan said a little bit earlier, you know, depending on what your model is, obviously we have a slightly different model, and we're in a different part of fintech than Now Money and Kat and Ian are doing. And we're regulated here in the UAE. Our approach is to use that experience and the scars on the back and all the lessons that we've learned to go and help frame conversations with financial institutions in other markets, because I have zero interest in being regulated in any other market. Right? It's just the return on investment to be regulated, unless your market is at a certain size, and it goes back to the point of fragmented, is that within this region there's a lot of fragmentation. So the lessons are invaluable if you become regulated, because you're held to a certain standard. You have to ensure that, you know, all components of your business are are at the top of your game. And because it's new, you could argue you almost get increased scrutiny over, you know, just somebody opening a fund management business, because there might be 400 fund management businesses in the region. The regulators are fairly relaxed. The rules are very laid down. It's not that difficult. When we approach a regulator, or when like Now Money approaches a regulator, the regulator has to take a whole holistic view to try to even understand the business model, not just what is the regulation, but how does the business model, how does the money flows, etc. Where's the risk? Where's the risk? Where's the risk? So if you can use that then to say, okay, we can now have an empathetic conversation or a sympathetic conversation with bank areas such as compliance, information security, you know, the areas that tend to get approached towards the back end of any deal, but are the people that say no, or the people that can just raise the spectre of risk again at a senior level. You need to at least have that experience, have gone through a certain amount of pain and understanding to be able to have a meaningful conversation and to show that you understand where the risks are for them and how you can mitigate those risks and militate those risks. So I think it becomes incredibly important. Would I necessarily want to be regulated in every country in the MENA region? No, because I think the cost and the economics just wouldn't work.
Mm-hmm. Okay, perfect. So what I'm hearing here is that it's the lack of harmonization between the regulations or the regulators that really plays as a huge part to what might defer someone from, let's say, doing a fintech in the region. And Hassan, by yourself, with your experience, is this something that you hear?
just add that, no, I don't think it necessarily, it goes back to Hassan's point, I don't think it necessarily stops fintech, it stops what is the operating model of a fintech. And actually it creates more tech, right? So technology companies coming up with financial solutions for financial. So I think you'll find a lot more of, I mean, if you look at probably ADGMs, Reg Labs, etc., I suspect quite a lot of the entrants into that are people that are providing a technology solution to a component of regulation or financial. So it becomes more about solving problems for the larger financial institutions rather than having an operating model that is to an end user. And the difference is, you know, Beehive and Now Money, we actually deal, we replicate what a bank does in certain aspects of its operations. Whereas I think you'll find more fintechs in the region will be about solving a problem for existing financial institutions.
Yeah.
Okay, thank you for that. Hassan, anything to build on Craig and Catherine and Wailum?
Yeah, I think if you look at the evolution of how the regulators have been working in the region, across the region, you've been seeing a lot of these sandboxes that have allowed fintech startups to get started, which was unheard of even a few years ago. So that's become a much easier path to get started. So to get started at the seed stage and just have a proof of concept, the regulation to get through the sandboxes, it's not easy, but it's not as impossible as it used to be. I think, as Craig mentioned, and Catherine as well, there's no passporting for regulations across the GCC, which I think should be one of the easiest things. Well, no, not really easy, but one of the things that should be worked on. If someone's regulated in a DGM, they should be able to operate in most of the GCC. If someone's regulated with the CMA or SAMA's FinTech sandbox, they should be able to operate across the other markets in the GCC. I think that's a very obvious sort of step to actually move forward, to encourage not just small fintech startups to emerge, but to get large startups to really be able to grow and scale across the region to be globally competitive. I think the issue that I face when I look at how do I invest in more fintech companies is there just isn't that many that exist, and there's not a lot of entrepreneurs and founders that want to start fintech companies. At some point a few years ago, I think 3 years ago, there were more fintech sandboxes in the region than there were fintech startups. So governments were being more active than actually the startups themselves. That's changed a little bit now. I think the core issue with all of that is not regulations, not any of that. It's the financial sector, the financial industry is a very niche, very specialized sort of industry, and someone just graduating from university trying to do a startup that disrupts something within that typically won't have the awareness or the knowledge of that industry that is needed for them to start a startup. And the advice you get as a founder is, hey, solve a problem that you know about, that you've experienced yourself. And most people that have not worked in the financial industry or as consultants to the financial industry won't know what these problems are. Won't have any idea what problems exist for them to be able to solve. So you're looking from a much broader number of founders that exist in the market, narrowing down quite significantly to people that have a little bit of expertise or experience about what the problem is that they're trying to solve within sort of the fintech industry. I don't think fintech's ever going to be a broad-based sort of a big chunk of the startups that we're going to have in the region. I think it's always going to be a specialized niche. I think focus on number of fintech companies and things isn't really useful. But I think helping those few that understand the problems that are trying to solve them be able to solve them more efficiently across the region is something that regulators probably need to look at. Now that they've crossed the first step of giving them a sandbox to operate, the next step is this sandbox efficient enough? Because I know a lot of sandboxes have restrictions which don't really allow startups to show the traction that I would need as an investor, for instance. And is this sandbox going to allow them to expand beyond just my market as well? So I think those are two areas where regulators might need to play a bit of a role in the next phase of evolution of the regulation.
Perfect. Thank you so much, Hassan. And if no one has any more additional inputs, I'd like to actually just shift the conversation in terms of something I've been hearing as well. It's the concept of, for example, fintechs the operating model. So they may focus on a niche journey that already exists, or they look at the overall thing. So I wanted to see how can we leverage, or let's say existing companies, established companies, leverage fintech partnerships to really modernize, to add new functions to the already existing legacy system, which could hinder the actual growth and agility to innovate and expand. So I would like to start off with Hassan. Anything to say in terms of that you may potentially see? Leveraging the fintech?
Yeah, I think that every company essentially could have some component of fintech within it. I've spoken to some fintech investors and I'm like, that doesn't look like fintech. I mean, why is that in your portfolio? And they're like, no, it's fintech because of this, this, and this. And so everything can be fintech. And I think one of the benefits that companies can have is if they've got the customer relationship, they can bundle things on top of that. And that's something that the car industry has been doing quite well for years. You know, they don't really make money off selling the car. They make a lot more money off selling the actual financing for that car. And so seeing that sort of emerge as something where if you're a company, a large company that has a customer relationship, how do you add fintech related sort of services on top of that customer relationship? And probably don't build it yourself, just find startups that are solving that and put them on top of what you're doing. I think that's really something that's a bit of a no-brainer for me, but of course corporations are very difficult to work through, and there's all the internal politics and the headache and buy-in and champions and all that sort of stuff. So it's not as easy as that, but I think opening up additional revenue streams by bundling things on top of a customer relationship is definitely something that a lot of corporations should be looking at much more closely as sort of we move into a recession across the globe.
Perfect. Thank you, Hassan. Craig, you have something?
I think you see quite an interesting difference in approach, whereas you've got corporations on one side, and then you, I guess, for the want of a better expression, large startups. Right? What I mean by large startups, so if you look at Southeast Asia, you've got Grab, you've got Gojek, those kind of guys. Right? Financial services became a real focus for them. Unit economics, they're losing money on every ride. Then you shift to food, then you shift to providing everything else. And then a major focus becomes financial services, because it goes back to the point that Hassan talks about, that if you have a huge database of users, consumers, and you're the access point into a number of services, then the ability to then, even starting quite small, financing a driver's car, financing a driver's phone, right, all the way up to ultimately to be able to provide a wealth of financial services, and probably even try to get in the wealth management side as well over time. So you see a lot of that with the super apps out of China, Southeast Asia. I know Kareem have got Kareem Pay, that's relatively small here. So you're starting to see some of that. On the other side, you've got the corporations that I think are now starting to, because 5-10 years ago, everyone thought data. The amount of data that's created on a daily basis, no company in the world can analyze the amount of data it gets to be able to extract every element of value out of it. Right? A lot of them can do the data today, but they don't have any capacity to look at the data from 3 years ago, or they're looking at the data from 3 years ago and just accumulating the data from today. So you end up in a situation where, how can these corporations find the customer reach that they've got, and how can they exploit that, particularly with financial services, right? And create a deeper relationship with their customer. So you'll start to think more and more of that. I mean, naturally, telcos, etc., always used to have a lot of data, a lot of billing data. You could build credit models based off people's repayment cycles, etc. And corporations, it's probably one of the easiest areas to commercialize your data, is if you can sell a financial product that is a net contributor to your bottom line. It's financial services, but you've got to have that reach and that focus. And I think that what's changed now is a lot of those organizations probably think there's no point building internally. Right? There's no point building internally because every time we set up a committee, there's 25 people sat on the committee. You have meetings after meetings after meetings. You know, you're almost better just putting an amount of cash aside, letting people see if they can knock up the equivalent of your, I don't know, your Nespresso at Nestle. Right? You know, you've got to try ways of how do we do something with this data we've got, and how do we keep some form of startup DNA to be driving through it. So I think you will see more and more corporations, but you're also seeing the very large startups starting to angle a lot more to financial services. You could argue whether that's because the commercials or the other aspects of the model don't stack up, but who knows?
Perfect. Thanks a lot, Craig. Catherine, Wailum, any input regarding this?
Go ahead, Wailum.
Okay, right. To me, collaboration is the key to fast adoption. Open is an essential ingredient. The question is whether there's a digital infrastructure that will help the fintechs and the corporates deploy faster and smarter. And I mean, I mentioned earlier about our constraints around our current analog regulatory sandbox, which doesn't really help foster deeper collaboration between the banks and the fintechs. So what we are trying to install in our next version of our digital sandbox is to bring in other participants like the data providers, the government agencies, the banks and the fintechs in trying to see how the data that is provided from the various providers and government agencies can help them explore potential use cases that can improve the economic outcomes of a lot of these industries. So just take the example of the car, second-hand car industry, right? To even sort of change hand between one owner to another, there's so many physical processes, and a lot of this data could actually be residing somewhere, and the banks just need to have those information verified by the government, and then the cash can change hand seamlessly without having to have physical cash and so forth, right? So those are things that we are trying to bring on deeper collaboration, bring about deeper collaboration by bringing in more participants. And one value proposition that we're starting to see in terms of our engagements with international regulators is that there's actually some benefits in allowing international regulators to plug into our sandbox and observe what we're doing as well, because they will know that these are the things that are being tested in this region. And if they want to import similar things into, let's say, the region across Saudi or to Jordan, right, the regulators who plug into that observation will be able to hopefully fast track some of this deployment and materialization on the ground. So I think as a regulator, we need to play an even more active role in actual usage of infrastructure, actual building of infrastructure to facilitate the process of collaboration between the various participants. Yeah.
Perfect. Thank you, Aido. Catherine?
Sure. So just to go back to your original question, which was how can fintechs and new partnerships add value to legacy systems? I think one of the points worth mentioning is that most traditional financial institutions, their systems are so legacy that many of them were built to run on the telephony system in like the 70s or 80s. And a lot of banks are actually still running on those systems. So even if there were more data that they could receive, their ability to actually store and utilize it is very, very low. And I think further to Craig's point about other organizations that will be looking to get into financial services, one of the things that is pretty commonly known about lending now is that there are much better indicators of somebody's ability to manage credit than just the day that they are paid and how much they are paid. Like, for example, what you buy, when you buy it, when you make phone calls, what time you make phone calls, the regularity you do those things are much better indicators of somebody being a good candidate to manage credit. And I think there's no escaping the fact that there are organizations with a much richer wealth of data than your legacy banks that now are going to be able to do that. So if you start looking at kind of super organizations like Amazon, everybody, all of us buy stuff from Amazon all the time. The profile that they have on each one of us is absolutely vast, especially if you started to connect it to the TV shows you watch, those kind of things as well. And a player like that, the amount of data that they've got to make an ability about whether to lend to you, at the time that you're making a purchase or when it looks like you might be getting ready to buy a house, like is so much greater potential than your current suite of banks and stuff. So I think we are likely to see those sort of organizations really start to encroach on the very traditional lending space that banks have had for a long time, whether or not people in this region decide to regulate them, because those are the sort of organizations that can afford to do it from wherever they are based. So I think that the threats of players like that to the traditional lending mechanisms are pretty high. So it doesn't necessarily add value to something legacy, but it certainly threatens it.
Okay, perfect. That's a great input, Catherine. So it is something that we're starting to see where the non-financial, the usual organizations that are really not in financial are starting to, let's say, dip their feet in the pond of the financial services like Amazon, etc. And now that we just have 10 minutes, I'd like to just shift our focus. Now that we've discussed fintech, its benefits, the regulation, all that, and we also see what's happening around us in the world with COVID-19. I wanted to take your opinion in terms of, we see a lot of emphasis on digitalization, a lot of emphasis on potentially how can we get out of this crisis, even in financial terms. So I wanted to see, do you think that this concept of let's go as digital as possible will endure post-COVID-19, or do you think it's just something that is just for the meantime, as most countries are in lockdown, etc.? I'd like to start off with Wailum. Do you have any opinion on that?
I think the imperative for digitalization is clear. There's never been a time where all the various stakeholders would agree, right? But the execution on the ground would be challenging. There are certain things which I think will accelerate for sure, and that is because there's a change in the consumer behavior, right? I mean, the social distancing is forcing some change in consumer behavior, and the question is whether after the COVID-19 pandemic is over, people will revert back to their old way of doing things. I think that given the protracted lockdown, I do believe there's going to be a shift in the consumer behavior, such that the people will use more digital payments for online businesses, for food delivery, so on and so forth. And for the banks or financial institutions that have decided to go along this path of digitalization and invested in the technology, it makes sense for them to continue in the path because they would have invested a certain amount of investments into this, and to sort of invest in that amount and then decide that you want to pursue this anymore. I don't think that's going to happen. The banks will probably sort of narrow some of this channel or steer the consumers towards moving to digital. So I think post-COVID, things will probably, it will now be a new norm. I mean, also rather there's a new norm, the consumer behavior will fundamentally change. So I think some of these trends towards digitalization will stay, but a lot will also depend on whether 3 years down the road, some of the businesses will still be floating. So I think those are questions that the large institutions, as well as some of the fintechs nowadays in the near term, will have to think how to tap over this immediate period.
Perfect. Thank you, Wailum. Catherine, any input in your views on post-COVID, how the digitalization of the era will go?
So I think we're stating the obvious a bit to say that it's driven, this environment's driven people to digital. Digital was growing enormously anyway in the Gulf, e-commerce, fintech, all of it. Customers have demanded those products for a long time. It's taken a while for quality products to get to market. I think in the case of fintech, as we've gone over already, the barriers to entry are very high, so it's taken quite a while to get those products to market for customers. The customers have had strong appetite for them for a long time. Most of the people who live in the Gulf are expats, and they, in their home countries, have had access to good digital financial services for ages. So it's been a bit of a no-brainer that we just needed to get them here and make them available to people. And then there's, I guess, a smaller segment of the population who perhaps weren't interested in digital or just hadn't got around to exploring it yet. And we just had a bit of an artificial shove towards that. Now, do I think people are just going to ditch it afterwards? No, like we might get a very small drop off, I guess, in customers who decide to go back to doing things in hand, in cash, by walking to shops. But I think the large majority of people are probably a bit happier having more time to themselves and being able to do things remotely.
Brilliant. Thanks, Catherine. Hassan, any input regarding this?
Well,
Yeah, I think this shift was expected to happen at some point in time. Everyone was hoping within 5 to 10 years, but it's happened much faster now because of COVID. So silver lining, I guess. But I still do think that there will be a slight drop off. I think one of the things that a lot of, especially e-commerce players and existing companies that are trying to move into e-commerce, they're not having a great time providing a good customer experience for people. And so if the customer experience for doing something online is worse than your customer experience of just going to the shop and buying it, especially since, you know, it's a 10, 15, 20 minute sort of drive to get to wherever you need to go. I think that's something that needs to change. I think a lot of people now are forced to use a lot of things that they probably hate using. And if that customer experience doesn't change, then you'll see a shift back for a couple of different things. I think that's something a lot of people need to focus as well, is not just is it a macroeconomic shift towards, you know, everyone just using everything digital, but is that experience actually positive for customers, or are they forced to be doing it now because they have no better option? And that's a case-by-case basis. There's some large companies that have had to scramble to figure out how to do deliveries in e-commerce, and they've done very well. And there's some which have failed miserably and are probably going to continue to fail miserably because they just don't have the right mindset and approach towards it. And I think that's where startups sort of have a little bit of an advantage, because they have no choice but to provide a good customer experience because they're already competing against the existing players and everything else. So it's built into a lot of startups' DNA in the first place. So yes, this will be a shift that will continue, but there also needs to be people shouldn't rest on their laurels, and a lot of the startups that have benefited from what's happening with COVID need to take advantage of maintaining that sort of after the coronavirus sort of goes away.
Thank you, Hassan. And Craig, your views?
I think we're going along a track that we'll continue to do. I think also I agree with Hassan that customer experience is going to be a huge component. And I think just the final thing I'd add, though, is that it will probably move digital and all digital initiatives up the conversation in the C-suite for a lot of organizations. Yeah? Because it's like a lot of things in technology. If the CEOs and the C-suite people have had to change the way that they interact in their daily life, then they suddenly start to ask questions within their own organizations. What are we doing? What are we doing about this? How are we approaching this kind of problem? And so it will just move on the agenda list.
Okay, brilliant. Well, we have just 2 minutes. I just want to see if any of the audience had any questions for any of our panelists. Just feel free to write it down and we can definitely have a quick answering. Otherwise, I think in summary, what we've heard today is really showing that, look, post-COVID-19, sorry, is there an echo in my voice? Sorry. Okay, so post-COVID-19, we see that, as Craig mentioned, a lot of the digital initiatives will come up on the higher of the agenda for the strategy. Regulation might need to see a bit more harmonization in terms to encourage more of the operating models and fintechs, etc., to really enter the region and expand. And ultimately, I'd really like to once again thank our panelists today for sharing your expertise and your opinions in regards to this. And thank you again.
Thank you.
Thank you. Thank you, everyone.
Thanks, Abdullah, and thank you for everyone for joining today. I hope you all enjoyed it. So that is the end of our webinar session for today. So again, thank you to all of our panelists and thank you to the audience for listening in as well. The webinar will be accessible via our website for on-demand viewing. And if you have any further questions, you can just get in touch with us via our website as well. So we have our next webinar at 11 AM on Monday next week, which will explore Strategic Digital Banking 2020. Is it time to hit reset? So thanks again for everyone joining and for all panelists being involved, and we hope to see you again soon.
Thank you.
Thank you.
Bye.